and welcome everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Tuesday, October 25th, 2022, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we have futures, they were down. Yeah, right now we're showing Dow futures down 136, S&P 500 futures down 12, NASDAQ futures down 11. So on a percentage basis, actually showing a little bit of strength this morning in the NASDAQ shares. That kind of makes sense. We got the 10-year Treasury yield this morning down about 5.5 basis points, 4.18%. Crude oil down about $1.26, down to a little over $83 a barrel. So still got a little bit of time to go before the market opens, but at this point, looks like maybe we're going to open down across the major indices, but it should be fairly mild, again, at least based on what we're seeing so far. Let's go ahead and walk through today's agenda. I'm going to start off with the daily market recap. Then we'll take a look at talking technically, blog highlights, earnings spotlight, and we will wrap up with the 3 you must see. Before we do any of that, though, let's take a look over at earningsbeats.com. For those of you who are new, go over to earningsbeats.com. I do have a big announcement. On Saturday, November 5th, we are going to have a special event, Understanding Market Manipulation for More Profitable Trades. I'm going to go into a few things here, but you can hit this register now button, get registered for the event. It is free. I repeat, it is free. There will be no credit. No, you don't have to turn in or give us your credit card. Nothing there, completely free. Honestly, I just want to talk about what I've seen in 2022, a lot of the manipulation that's taken place. I want to give you a stat. This one ought to blow your mind because it blew mine. Okay. So in 2022, I'm going to give you a chart of the QQQ first. Here's the QQQ. This is where we were at the beginning of the year, 400. The QQQ, by the way, is the ETF that tracks the NASDAQ 100. It's one of our major indices. So the QQQ was at 400. Recently, it went as low as 256, 255. This low right here, 254.26. So it has fallen from 400 to 254.26. That is a drop of 146 points, which is roughly 35% this year. Here's the stat. If you had invested same amount of money every single trading day throughout the year, if you had traded the same amount of money and bought the QQQ at 11 a.m. Eastern and sold it that very same day at 3:59.59, right before the 4 o'clock close, you'd be up 15% this year. Think about that for a second. We're down 35% in the QQQ. If you had bought the QQQ every single day at 11 o'clock in the morning and sold it at 4 p.m. at the close, so you didn't hold overnight, you'd be up 15% year to date. That, to me, is shocking. And it's one of the things I've talked about all year. There are buyers in this market. It's one of the reasons why, in my opinion, this is a cyclical bear market. This isn't staying down. We've had a lot of buyers in the afternoons. We are getting scared by the media every morning, most mornings throughout the year. The news has been bad. It's been getting worse. I talked about at the beginning of the year. I said we were going to go from inflation to higher interest rates to recession talk. Where are we? Inflation to higher rates to recession talk. That's what we've done all year. And Things are horrible, right? Sure, certainly seem that way. It ain't going to last. It's not going to last. There's a lot of buying going on. Wow. A lot of retail traders are selling, getting out, can't take this market anymore. From 11 o'clock in the morning to 4 o'clock, we got a bunch of buyers out there. It's the gap downs and it's amateur hour in the morning. It's the gap downs followed by fear, panic, morning selling. I'm going to go over a lot of this on Saturday, November 5th. Mark your calendar. Register now. Save your seat. We do have limited seating. Make sure you get registered. Again, it's free. One more time. It's free. Saturday, November 5th. If you can't make it, we're going to have it recorded. Make sure you at least get a copy of the recording. Check it out. It's going to be an eye-opening webinar for a lot of folks. I promise you that. All right. Let's talk a little bit first about what happened yesterday. I'm just going to go through some of the main numbers. I'm looking at all this green. And so I just wanted to show you this. It's not a huge day up. I mean, Dow was up 400 points. That's not bad, up 1.34%. NASDAQ was actually up less, only up 1%. The reason I wanted to show you this is everything's up. But the one thing that's really odd that shouldn't have been up was the VIX. Now, it did come back down later in the day, but the VIX was up to 29.85. It was, well, it finished up at 29.85. It was up another full point to about 30.85 early in the session, which was kind of strange because the S&P, while it went down, was not down much. I mean, we gapped up, then we pulled back just a little bit. Volatility index was up quite a bit in the morning. So we worked our way down the rest of the day. We did finish below 30. So that was good. But I just wanted to point out the volatility index yesterday was up with a pretty solid day on the market. That was a little strange. You can see the top percentage gainers on the S&P 500. We're going to look at a couple of these later in the three you must see, just because I think that there are a couple of key trading points that we can take away from a couple of these stocks. So we'll definitely look. Actually, all three of them are going to come from this list. If you look at the bottom performers, LVS, so you got Las Vegas Sands, gambling stock down 10%, back down near the lows. One thing I will say about it, though, is it did hold on to support. So when you're looking at this move down, I mean, it looked like it had broken down to a multi-month low, but it held on to support. Earlier this month, we had broken out finally above $41, and it looked like, hey, we were off to the races. And then we failed, came right back down, go all the way down to support. Now this looks like maybe a possible false breakdown to the downside. We'll see what Las Vegas Sands does today, but that is one I would certainly keep an eye on. Let's see, Starbucks down a pretty good amount. I mean, we were up over $90 a little over a month ago. You could see on that little thumbnail chart. And then now we're back down testing some recent lows right here, 82.50. That's an area I think you should be taking a look at Starbucks. I mean, if it fails at 82.50, you get out pretty quickly. That's a 3-month support area. Maybe you take a look at one other. Well, Win is in that same area. Let's take a look at Jacobs Engineering here. And they also got Tapestry down here. I want to see if any of these looked. Now let's go ahead and go with Jacobs. So Jacobs Engineering Group in a downtrend. You can see the highs right here, the lows. I mean, I see a flagpole and then a flag. So this to me looks like a bearish formation, a bear flag. Close below 107.50 would confirm it with some volume. All right, let's move on to the 10-year Treasury yield. 10-year Treasury yield yesterday was up 2 basis points, 4.234. As I mentioned, though, this morning, down almost 6 basis points now, 4.18%. So maybe we're getting a little bit of relief here finally from the 10-year Treasury yield. If so, that could certainly help spur the market on in the near term. Economic reports out today. We've got the August Case-Shiller Home Price Index, and we're talking August. We're now almost heading into November. So a lot of these housing reports are dated. They're definitely lagging. We can still, get something out of them, but mostly it's just going to be confirmation of what we're seeing in the market. But the August Case-Shiller Home Price Index expected to drop 0.8%. July had fallen 0.4, so we're expecting to see that pick up. August FHFA House Price Index expected to drop 0.7%. July was 0.6% drop. So again, looking for a little bit of acceleration there. And then finally, the October consumer confidence expected to come in this morning at 106.0. September was 108.0. So we're expecting bad news. We'll see whether or not we get it. Probably, those reports I would not expect to be great reports. So I don't know, see how the bond market reacts throughout the day. And I think that in turn will give us some indication on the major indices. Now, if we move on to talking technically, I want to show you the Dow, because the Dow Jones actually made a breakout above the 50-day moving average yesterday. Don't know if you saw that, but that 417-point move actually cleared the 50-day moving average. Now, I like what I would be watching more than the 50 is the 20. I like the fact that we broke out above the 20 about a week ago, pulled back, hit the 20, and then broke out again. That is starting to look more like an uptrend, the start of an uptrend. Also, you can see the PPO breaking just barely above the zero line. So I would watch the Dow. I think we've got an uptrend started. I feel more confident about being in on the long side if it were to pull back and hit that 20-day, because when you trend, a lot of times you will trend above the 20-day moving average. Now, we haven't seen a lot of that in 2022 because we've been in a cyclical bear market. We had a nice little trend back in July and August. We had options related move higher in March. And other than that, really haven't seen a whole lot of strength. So this is a little bit new. Watch that 20-day. The one big difference I would say about right now versus March and versus July, August is that we are heading into the strongest period of the year historically. So I expect that this uptrend is going to continue. I've been calling for it anyway. I think the market is going higher into the fourth quarter and throughout the fourth quarter and into 2023. And now we've got finally a historical period that would support that bullish move. So watch the Dow, but at least we're getting off to a good start there. The S&P 500 got through the 20, not the 50. We still got some work to do to get to the 50, but I'll show you in a minute, under blog highlights. I was looking for potentially a 3,900 test on the S&P 500, even back when we were in the 3,500s, because of this positive divergence. Look at that reversing candle. We had the lower closes, higher PPO. That normally means the 20-day will not hold, and we will go and test the 50-day. From there, it's an open book. If you go through the 50, you can start an uptrend. Sometimes you go up, you reset the PPO, and then you go back down again. I think this 3,900 level down to the 50-day moving average at 38.77, I think that's going to prove to be a very significant level on the S&P 500, and I think we're going to get there this week. If we do, we'll see if we get through. The QQQ, I was just showing you, this tracks the NASDAQ 100. Again, been a rough year, but we did move through the 20-day the last 2 days. So any pullback to the 20-day, which is at 274.20, for those of you maybe who are looking to get more aggressive in this market, leveraged ETFs, I like breaking through the 20, going back, testing the 20, and taking my chance there. Because if you pull back, go back below the 20, I can get out very quickly. The leveraged ETFs really don't play that big a role into the downside. Because again, you close below the 20, you can just get right back out. But if this starts a move where you stay above the 20 for a while, a leveraged ETF can really juice up the portfolio. So that's one maybe thing to consider. We do have that positive divergence here on the QQQ as well. Lower price, higher PPO. Look for that 290 level, 50-day moving average. Then we'll go from there. Transports also, I thought, looked pretty good here. We have to break back up above this level. You can see support just below 13,000 here. You can see the gap down. If we bring up this inspector, I had a question. Someone asked, how do I get this intraday data to show up? You hit this inspect button. So for those of you not familiar, that's how you do it. But anyway, here we gap down from 13,510, opened at 13,009. The reaction high the next day, the highest close we've gotten since that gap down, 13,075. Yesterday, 13,066. You take out 13,075, I think you've got the 50-day and gap resistance. So it could be another 2 to 3% back to the upside. Would not surprise me at all to test that area. All right. Next up, I want to take a look at blog highlights. And I was having some problems on Chrome. So just bear with me a second. I'm going to move over to Safari for just a second with the blog highlights. All right, so I wanted to talk about a couple. This was an article I wrote in my Trading Places blog on October 23rd. So it was just over the weekend. And you can see here I talked a lot about the sustainability ratios. I'm not going to really get into that a lot. But what I did want to point out is right here, that lower low on the S&P with the higher PPO, that generally leads to PPO centerline tests and 50-day tests, which was at that 3,900 level. So I wanted to point that out. The 10-year Treasury yield since mid-June is up 70 plus basis points. 70. And yet growth stocks versus value stocks are higher than they were back in June. This is the rotation I'm talking about. Every one of these, and this is transports versus utilities, which all of a sudden now making a huge move back to the upside. But growth stocks versus value stocks, small cap level, higher. Growth stocks versus value stocks, mid cap level, higher. Growth stocks, value stocks, large cap level, higher. Another ratio showing large cap growth to large cap value, higher. XLY to XLP, discretionary versus staples. Normally staples leads on the way down. You can see staples were leading. Discretionaries first. So discretionary is getting hammered relative to staples all the way through when? May. When we hit that June low, all these ratios were starting to turn back up again. Now, the one that has actually gone back down to a new low, barely, is the QQQ. But think about it, 70 basis points on the 10-year Treasury yield, higher. The growth-oriented QQQ versus the more value-oriented SPY, this thing should be falling apart. And even though we went temporarily below, currently we're actually slightly above. If we pull this up in real time, we're above. I mean, these ratios are turning back up again. Now that one went down just a little bit. But yeah, I mean, transport's getting ready to break out again versus utilities. All of these ratios normally will follow S&P price action. When they don't, you need to take notice. They didn't in December, January. That's when I called a top. They didn't in June. That's when I called a bottom. And they're still not going down, which is why I don't believe we're going down much further, if at all. Anyway, the other article I wanted to show was the one I wrote back on October 16th. And this one was very similar to what I saw back in March. Talked about March and the fact we could have a big jump. Here was the big sell-off. 1 week prior to options expiring, we had a ton of net in the money put premium. And there was your big rally. And it continued even for another week afterwards, but that got things started. So what I was saying was, leading up to option expiration last week, this is what the market did. Another huge drop right before the week options expire. Lots of net in the money put premium. It behooves market makers to use their capital to push prices higher to eliminate a lot of that net put premium. Does it guarantee us that prices are going up? No. Market makers protect themselves. When folks are buying puts, market makers sell puts, which means when the price goes down, they're going to get killed. Except if you sell those puts and then turn around and short the underlying stock or index, you can protect yourself. And that's what market makers do. However, if you're shorting and you get down to a bottom and you turn around and cover those shorts and go long, you make money on the shorts, you make money on the longs, and you pay out less money by in the options world when options expire by having prices go back up. Market makers make money 3 different ways. So this is where I was saying maybe we get back to that 3,900 level. Again, pull this chart up. Where are we now? Look at what's happening. I don't make this stuff up. I've been studying the market for a long time. From a trading perspective, this is more manipulation. Got to be aware of it. Got to be aware of it. All right, let's go back over now. Let's do our earnings spotlight. But again, before I go into earnings spotlight, I want to make sure everyone who maybe came in late, we have a November 5th free event that is $0. No credit card required. Just register and come in. It's a free event, November 5th. Understanding market manipulation. One thing I said at the beginning of the show, if you missed it, the QQQ has dropped from 400 down to 254. It's come back up a little bit of late. But during this entire year, if you bought the QQQ at 11 o'clock in the morning every single day and sold it at 359.59 right before the close, you'd be up 15% this year. There has been plenty of buying this year. It's after 11 o'clock. After the retail trader panics from the gap downs from all the bad news, and then the morning selling, amateur hour. Then the buyers show up. Anyway, going to talk a lot about that on Saturday, November 5th. And also, if you're registered and can't make it, we'll send you a copy of the recording. So register. Make sure you're registered. Go to earningsbeats.com, and it'll be right there in front of you. Make sure you register. All right, earnings spotlight. Got a couple minutes. Just wanted to go over, this is a session we had with our members last night. Q3 earnings. Went through and I listed 68 companies this week that I think look like they're going to have good numbers based on the way they're trading. And then I had 57 that are not so good. And what I ended up doing was going through some of these charts and just pointing out in a very simple format some of the things to look at. So Cadence Design, if you look at the price action, okay, it's doing okay. AD line was at a high in August. It's pulled back a little bit, starting to turn back up again. Look at the relative strength, CDNS versus software. It's one of your best looking software charts. Now, software has been weak, so it doesn't mean that we're going to go higher with Cadence Design, but it is one of the best performing software stocks. What are the leaders doing? How do the leaders report when they come out with their earnings? I think that's really important as we really begin to jump into earnings season here. So, watch that closely. Another company, ARE. This is in real estate. Look at the real estate group. Its peers, ARE's peers versus the S&P 500, horrible. But look at ARE relative to its peers, very strong. This is one of the best stocks in one of the worst industry groups. How do they report? How does the market react? I think that's information we need to know. WRB, this is one of the best stocks in one of the best industry groups. Here's the insurance group relative, or its insurance peers relative to the S&P 500, 52-week high. Here's WRB relative to its insurance peers, 52-week high. AD line, 52-week high. Yesterday and after hours when I was going over this, stock was at 67. Buy on rumor, sell on news. That was yesterday at 4:45 or whenever I was going over this. It was at 67. I even made the comment last night. I said, this is a stock that could be trading back up at 71 in the morning, 72. If we look at pre-market right now on WRB, 71.31. It's up $4 since I talked about it yesterday and after hours. Why? Well, when you get these stocks, number one, it's breaking out to a 52-week high during a bear market. That ought to tell you something right there. This is a great relative performer. Lots of momentum. Look at that PPO right now. Very strong. When you get these breakouts, you're going to get pullbacks from time to time. Yesterday, when this thing was at 67 and change, at 72 and a half, a pullback to the 20-day I'd be interested in. They came out, I think their numbers were like I'm doing this off of memory from last night, but I want to say it was like $1.01 versus 82 or 83 cents. They crushed their earnings. But a lot of times, again, you get buy on rumor and you'll get some selling on news. That is usually a great time to get into an excellent stock. So any kind of a move down here into the 66, 67, 68 range would be awesome. Again, now it's back up over 71. WRB looks very, very solid to me. And then you can go to the flip side. I'm just going to do one of these just to show you what this looks like. So here's AVTR, Avantor. It's in the materials area. Been going down. Look at the AD line. Horrible. Relative strength, horrible. Not expecting much out of this company. We'll see what happens. All right, let's move on. 3 you must see. Let's wrap this up. So look at the false breakdown here on HCA. Gap down, false breakdown, came back up, rallied right back to where it started 2 days ago. Morning, gap down. Selling in the morning, then we take back off again. Sound familiar? Next up, RF, Regions Financial. Look at this. Going down, just barely beneath that prior low. Down near 19, 1 day later, 20 and a half. These false breakdowns at support, especially if you think the market's going higher, these are gold. It literally is just gold, printing money. Get a false breakdown, reversal, then a rally. That's how market makers accumulate shares. They know there's stops down here. They trigger the stops, get the money, and then back off. We go to the upside. All right, last one I have for you is CarMax. CarMax has been horrible, big loser. It did on increasing volume put in a reversing candle. Maybe we get back to the 20-day. We'll see. Anyway, that's it for me. I appreciate everyone tuning in. Remember that event, November 5th. Mark your calendar. Everybody have a great day. Happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.